Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
We're at Schwab Impact here in the Moscone Center. Just want to point out that UBS recently came out with a report. It found that millionaires already accounted for about 1.5% of the adult population. They analyzed this in 2023, and they said by 2028, that will have risen in 52 of the 56 markets that it surveyed. In some markets, the number of U.S. dollar millionaires will increase by as much as 50% over the next 5 years. Wealth management has been a booming business for the last few years, I would say, and it continues to be so.
Yeah, it's all kept those involved in the industry super busy. Client assets at the retail brokerage Charles Schwab and the wealth arms of these 6 largest U.S. banks surged $5 trillion in the 12 months through September. 23% jump as the group's revenue from the business collectively topped $84 billion so far this year.
Let's get to it with a guest. He knows what's going on. We're delighted to be here in San Francisco with Omar Aguilar. He's the Chief Executive Officer, Chief Investment Officer at Schwab Asset Management. Omar, nice to have you here with us. You see a lot. Tell us about what you guys are seeing in terms of wealth management.
Yes, and welcome to Impact.
Thank you for having us.
It's great to see you, everybody, here in San Francisco. We see a continuous need and continuous demand of clients for advice. I think as people continue to grow in their lives and they continue to accumulate wealth, the need for them to have somebody they can rely on and continue to just work on what do I do with their money? How do they actually set up? And, it's kind of interesting with all the information that is available today, there's not a lot of people that actually can make a decision on what to do with their money.
Seriously?
And it's just difficult to do.
Why? What is it that they're lacking? What kind of information are they seeking?
I think it's almost like when you go grocery shopping. There is a lot of options. Back when I started my career, you wanted to save for retirement, there was one option. Just buy a target date fund. That's it. Based on what year you're going to plan to retire, that's one option. But now, today, there's multiple options, multiple things. You can do managed accounts. You could do it on your own. You could do a model. There's several things that you can do. And therefore, there's a natural human, bias that tells you, oh, well, if there's too many options, I'm overly done. I cannot make a decision. It's almost like me trying to find a shampoo. It's like, no way you can actually pick something that will be good. And then once you pick it, there is a regret. It's like, well, did I pick the right one? Did I not pick the right one? Maybe it wasn't or the price. And that's a big part of the same thing happens when it comes down to finances and where it comes down. That's why there's what we call a bull market for advice. Especially when you accumulate wealth, there is a significant amount of need for clients to reach a financial advisor or an RIA to be able to just find what is the right solution for them.
What's interesting, though, is Charles Schwab offers both of these sort of different areas. You could do it all yourself using Charles Schwab's retail brokerage platform, or you could use an RIA whose back end is supported by Charles Schwab. How do you support both of those things, even though they offer very different things?
Yes, well, that's a big part of, the institutional knowledge of trying to do things through client eyes. And in many cases, there's many clients that, want to use their tools on their own. And in many cases, they actually know what they want to do and they're looking exactly what it is. And just thinking about, like a supermarket, there's people that know exactly the brand they want, exactly how they want to do it, and they're loyal to what their pieces are, and they will continue to do that. There are others that are feeling more comfortable, relying on an advisor for them to find what their path is. And, both of them are reliable. Both of them are actually things that I have. There's some clients that like to trade every day. There are other clients that want to buy it today and forget about it. So there's a lot of flavors for everybody.
Omar, in the wealth management business, I'm just curious how many people are, find it, park it, leave it there. They're thinking longer term. And as a result, we're going to have a great bunch of the Schwab team tomorrow on. Liz Ann Saunders, we're going to talk equities, global equities with Jeff Kleintop. We're going to talk fixed income with Kathy Jones. But increasingly, we see people wanting access to the private markets, private credit, alt assets. How much of that is at play with you guys too?
Well, it is a big part of the market. And I think to the first part of your question, there's a lot of clients that like to have what we call a financial plan, that would like to have an asset allocation, that would like to have a long-term setup. And, the majority of clients and our philosophy encourages for everybody to have a financial financial plan. Everybody should have a financial plan. And then once you have a financial plan, you can set up your long-term investment objectives on what you're investing for. And in many cases, it could be retirement, it could be income, it could be growing, it could be buying a house, it could be a lot of things that you can do and then put the money to work that way. Now, that being said, the human part of every investor and every client basically shows that when you hear the word cryptocurrency, Bitcoin, do you hear the words AI, you hear then immediately you pick up the phone and say, how can I be part of it?
Do your clients do that?
Of course, they do that all the time. And they do that all the time in any situations where they have, and then, how much exposure I have to the Max 7. Do I need to get out of the Max 7? Do I need to hedge my... So the normal setup of a human behavior to try to act on recent information is something that happens all the time.
What's the pressure that your clients are feeling when it comes to fees? And when I say your clients, I mean the RIAs and the wealth managers who are out there offering their services for a percentage of the assets that they're managing on your behalf. Because there are a lot of robo-advisors out there, including a robo-advisor from Charles Schwab.
Yes. Well, what we have done, we have run these studies over time that basically show what clients are looking for. Number one, yes, they're incredibly price sensitive. Price and cost is a big part of the driver for decision making. Transparency is a big part. Going back to the other question you had about private markets, that's a little bit of the hesitation today for clients to try to get more access to it. They're interested. They actually like to have it.
But they're cautious a little bit?
But they're cautious about it because of the transparency and the liquidity. And in many cases, once you explain that there is less transparency and then less liquidity for a private market, then they step back and say, let me think about it. I mean, initially sounds great and initially sounds like a great opportunity. And in fact, we encourage, a portion of their investments to be in private markets. However, once you explain the trade-offs, then you start to just, make a big different decision.
I kind of love to hear that because I feel like we've spent so much time at various investment conferences and everybody just wants to talk about private equity and in particular private credit. But a lot of folks are saying, you got to understand that you lock your money up, you can't get access, and the transparency issues are maybe not there. So it sounds to me that your investors are savvy enough to be asking these questions.
Yeah, no, and not only that, but the big part is the investors like to see, especially younger investors, they like to see data. They like to see information, before they make a decision. And this is a very interesting.
Are you looking at Tim as younger investors? Yes, exactly. Are you not looking at me? I'm just
looking at both of you. But when I actually think about it, when we do studies by generation, like silent generation baby boomers, they tend to be a little more trusting in that sense. And in other words, they trust the advisor, they have a relationship with the advisor, and they don't necessarily need to have that much evidence. And this happens actually with my kids. Even when I recommend a restaurant, they still have to Yelp it and try to figure out what the stars are. And in many cases like that, why do you recommend that it only had 3 stars? So it is one of these that they suggest evidence. They need evidence to make a decision. And in those cases, when you compare performance on private markets and public markets,
right,
you immediately start saying, why would I lock my money in where I can actually in there? Now, that's not the whole story, but I think that's a little bit of the hesitation.
We teased that we were going to ask you about key behavioral biases to be on the lookout for in today's environment. What are they?
Say that again?
The key behavioral biases that are out there in today's investment environment.
Well, I would say there's 3 that are incredibly, prevalent in today's market. Number one is herding behavior. Herding behavior, which is exactly what we're just talking about. And the Max 7 was clearly a big part. AI, Max 7, Bitcoin.
NVIDIA?
Definitely, part of what's going to happen. A lot of people will be watching this afternoon, or actually in a few hours, just on that report. But that component about that, and in fact, for that particular thing, not a lot of clients knew what NVIDIA was 5 years ago. It's not until now that it became so popular, and that's a big part of what is called the FOMO, and that's one of the biases. The second bias is called recency bias, which is people tend to just look at the most recent information and extrapolate into the future. The market has been up for 3 months. It should be going up forever. And that's the kind of behavior that people tend to have. Or the same thing goes back to when things go wrong. It's like immediately they become if we have had two bad deals, it's time for get out, and then try to just panic that way. And those are 2 of the typical behavioral biases that are very typical today.
Carol mentioned crypto, so I got to ask about Bitcoin because it did reach a new record today.
Tim does a whole show that's just about crypto. Everybody's doing a show that's just about crypto.
Tuesdays noon Wall Street time. Feel free to tune in. But it's interesting because it's the whole market of Bitcoin, the whole market cap of Bitcoin, not even the market cap of NVIDIA. So I think a lot of people would say there's still a lot of room for people who are crypto curious at this point. What portion of an investor's portfolio, if any, should be allocated to crypto?
Well, we have had points of view on crypto in general to basically say, like, look, any client could actually use, trades as a way to just generate or try to find any solutions they have. For any strategic long-term asset allocation, we haven't adopted crypto as being part of like what you would use for the long run. And in many cases, the reason why is because for our strategic asset allocation work, we normally try to find what are the fundamentals that allow that to be valued and what are the economic factors that drive the performance of certain asset classes. You compare NVIDIA to crypto. Well, in the case of NVIDIA, there is earnings, there is clearly financial situations, there are results, there is everything else. In the case of crypto,
there's actually regulatory SEC filings, right?
There is, exactly. And they are accountable
And
for
cash flows?
And cash flows.
Lots
of cash flows.
And actually, there is a product out there that you can touch.
Right.
In the case of crypto, a lot of these prices tend to be driven by supply and demand. It's supply and demand driven. It basically people have asked me the question and said, like, well, but gold, isn't gold the same? Like, gold is also supply demand driven? Yes, it is. But the difference is that there is a bar that you can touch.
Omar, 20 seconds. Top question you think on everybody's mind are registered investment advisors right now in this environment? Number one question, investment question.
The number one question is, what would we think about the market, next year, given, potential less regulation, potential, tariffs, and potential changes in the way that, the SEC, will move down their agenda next year.
All right, good stuff. Thank you so much.
It's good to see you guys.
Great setup for us here on this Wednesday. Omar Aguilar, he is the Chief Executive Officer, Chief Investment Officer of Schwab Asset Management, joining us here at Schwab Impact in San Francisco.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Massar and Tim Stenovec live at the Moscone Center in San Francisco. Schwab Impact surrounded by registered investment advisors, the Schwab team, and really all of the support network that goes into the investment advisory world. There's just so much going on, whether it's security, transparency, logistics, operational. This is what this event is about.
Also, something different about an event in San Francisco, lots of umbrellas here because it is raining a lot out there.
What happened?
I don't know.
Always
you come to California and you think it's going to be beautiful. I had planned to go for a hike later today. That's not happening. That's fine. It's all good.
Can we work on that?
It's all good.
All right, listen, one of the things we want to talk a little bit about is the fixed income world, because we've seen the U.S. government debt market decline since mid-September on expectations that President-elect Donald Trump's policies will boost growth and rekindle inflation. So we continue to see, I think it's safe to say, in 2024, the narrative around fixed income kind of evolve. We've got a great voice on this.
Yeah, Manju Boraiah is portfolio manager and head of systematic edge fixed income and custom SMA investments at Allspring Global Investments.
It's a big title.
It is a big title.
Does that fit on a business card?
Is there an acronym?
You got to turn over for the second half of title, right?
That's true. We got to shorten that a bit, actually.
Well, look, I mean, you are responsible for overseeing all active, factor-based, and enhanced passive fixed income capabilities and solution.
Right.
Joining us here at Schwab Impact, what's the conversation that's happening right now around fixed income, given that we have an election result,
right,
but it's kind of unclear what's going to happen in terms of government spending and also the collection of money from the government or by the government?
Yeah, I think in terms of policy, right? So let's talk about what's in store for 2025.
Do you feel like you have, transparency around it?
Not really.
Okay. As you set your forecast out.
No, I don't think any of us have a crystal ball.
What's your best shot?
That's my best shot. So let's think about the policy that's actually been outlined for 2025, right? So there's going to be deregulation coming forward, right? So I don't know how much deregulation and where. The second is around tariffs. So, potentially tariffs, right? And then the third one is tax cuts, right? So tax cuts for corporations or wealthy individuals. So when you put it all three together, they're essentially inflationary in nature. So I think what's in store for us, I would say there's policy uncertainty, right? Policy uncertainty definitely translates to more volatility across the different asset classes. And then also, if all three or one of the three is enacted, I think there's potential inflation pressures that's going to actually creep in. So
less moves by the Fed then?
I don't know, potentially a pause, right? So for
pause December or pause next year?
Potentially a pause in December.
Really?
If you think about what Chairman Paul has been talking about, right? So the recent rhetoric that came out of him was essentially that he said that we will have to obviously be data-driven, but he said that the rates at this point, the policy rates, are in line with the expectations. So if there is sideways movement in inflation, if you don't see that creep down, another notch down in the next month or so, potentially a pause. But if you look at the Fed fund futures, it's actually pricing in 50% probability. So we'll see what the data says, right?
We get more inflation reads before the December meet, right? We still have some data, as you say.
Right, yeah. But what this translates to, in my view, is higher rates for longer. That's really what it really means for fixed income, right, for 2025.
So where do you find alpha then in the fixed income world? How do you do it? How do you find it?
Yeah, so if the rates are going to be higher or moving sideways, so I think there are kind of three pieces, right? So one is focus on income, right? So you got to essentially maximize your income by diversifying duration. So one way to do that is to really kind of position across the curve, not really position on one or two parts of the curve. So you can essentially ladder across the curve, right? Intermediate to long-term rates is where I think there is alpha, just because of the policy uncertainty.
3, 5?
I would say 5 to 15.
5 to 15?
Or 5 to 20. Right?
Okay.
So because of the uncertainty in policy, I think there is going to be premium demanded by investors, so which means that the long-term rates are going to stay higher for longer. The other part is really bring in some international exposure, right? EM, international debt. So
where internationally? Duration. Internationally, it's a lot. Or are you just saying pick a basket?
I would say pick countries where there's divergence in monetary policy,
okay.
right? So you essentially have some amount of divergence from a monetary policy perspective, and then look for quality, right? So I think look for assets where there is potential, fiscal stability, a balancing of the budget and things like that. So I think you got to pick wisely.
We got news last week that the money market funds have surpassed $7 trillion in assets.
Yeah.
Maybe it's good that I'm not in the job of managing money, because I thought that as rates moved lower, things would move out of the money market funds.
Right.
Well, how do you look at that $7 trillion and where it's going to go and when it's going to go?
Yeah, I mean, that's the $1 trillion question, right?
Or the $7 trillion question.
And should we assume it's going to go anywhere? Are people just going to be happy and comfortable?
But if rates go
money?
down, then they might not be happy.
Yeah, I mean, that's, again, assuming the rates actually will go down, right? So
There's a lot of people assuming in the crypto and the equity markets that rates are going to go down.
Yeah, but if you look at the allocation to crypto or any of the ALs, that's a small portion of the overall portfolio. Yeah. So I would say if the rates stay higher, right, north of 4%, I think people don't really think about reinvestment risk, right? People are worried about what they're going to make over the next 12 months, 24 months.
What do you mean reinvestment risk?
So
taking out, doing something else.
Exactly, yeah. So if you think about why laddered strategies are really popular is because you don't have to worry about reinvestment risk.
Yeah.
So, and you can actually position for, potential policy surprises. So I would say that's really the key question is what the Fed does in December, what the expectations is for the next year. After September FOMC, there were 10 cuts priced in. And now it's down to 3.
And it could change again. Manju, 20 seconds. What's the question you think every investor should be asking themselves right now? Just quickly.
I would say, are they diversified enough? Do they have enough diversification in their portfolio? I think that's the key question.
All right. Great stuff. Hey, thank you so much.
Thank you so much. Thanks for having me.
Work on that title. Acronym. No, I'm just kidding.
We're going to shot in next year. Yeah.
Manju Boraiah joining us here, Portfolio Manager, Head of Systemic Edge Fixed Income and Custom SMA Investments at Allspring Global Investments. We talk to their team a lot. Always get some great insight.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got, about 20 minutes? Let's be right on the money.
Are you on the money?
18 minutes
Okay.
to go until the closing bell. It's a big day, right? NVIDIA earnings. That's certainly our focus front and center. I'm looking at the trade. We're up near our highs of the session, but it's not an exciting market. It does feel like a little bit of a wait-and-see mode. You've got the NASDAQ lower. We just heard Charlie talk about it. S&P call it relatively flat, but we're just kind of waiting to see what kind of message does NVIDIA say about itself, about the AI trade, about the momentum trade.
I was listening to Norma Linda and Matt Miller. They were filling in for us back at
They did
Bloomberg
pretty
HQ.
well, didn't they?
They were awesome.
Yeah, don't get any ideas, guys.
But Nora was talking about how Bank of America came out with a note that said, sort of contextualizing how important NVIDIA is, putting it on par with like a Federal Reserve meeting, other economic data.
Yeah.
I mean, given its market cap of, $3 trillion, kind of makes sense, but we'll see what happens when they report today.
Trading options signals this is going to be the most important catalyst left this year. Let's see what Brian Vendig has to say. He's Chief Investment Officer at MJP Wealth Advisors, $1.2 billion in assets under management. You're normally on the East Coast. You're here on the West Coast with us. How are you?
Doing great. Great to see you guys.
So how often do your clients come in and say, so about that NVIDIA, about that AI trade, tell us what you hear?
Look, it comes up a lot because, that's been the driving force of the market over the last, 18 months or so predominantly. We started to see a little bit of a shift second half of the year and the broadening out of earnings, coming from areas outside of mega cap tech. But look, this is an innovative trend that's still going to play out over the next 5 to 7 years. And we look at NVIDIA tonight, investors really want to hear, is competition changing in that space? I think it's more about not necessarily the demand, but can NVIDIA deliver on supply? Because when you look at analyst estimates for revenue growth year over year of over 80%, and these valuation estimates on future growth, because people right now are overpaying for growth if you look at it from a traditional perspective. So if those future earnings reports are delivered, we're actually not overpaying for growth for NVIDIA.
Because they're delivering?
Exactly. But I think that the real issue, Carol, goes back to your question is, with the new generation of chips coming with Blackwell, right? We're starting to hear little rumors of, can they keep production up to meet demand?
Right.
And if those things start to show that there's an issue there, then that opens up competition to come in from AMD, Intel, other places. And then the other part I'll just add real quick is the tariff conversation. The policy pieces, this mosaic that we're all moving through as investors, well, if you look at NVIDIA's business, depending on how that policies are impacted, they could have some negative impact from shipping coming back for some of their Asian-made products.
Right.
But then at the same point in time, you need to hear from them to say, well, that actually, could those tariffs even boost demand that could go to the Middle East? Which is something that's kind of interesting.
Wait, explain the logic there, the reasoning.
Well, because when you think about the things that have been said on the campaign trail from the Trump administration, they are creating a tariff regime that could be disproportional to different parts of the world. So if you're making something in Asia and you get hit with a significant tariff, that can change the pricing for your product that could impact demand. But then, are there areas of the world that would be outside of that?
Somebody else that benefits, right?
Right. And so could NVIDIA boost more demand of their products going to areas that are underserved, like in the Middle East, for example? So these are the things that investors want to hear about, which is why we're in this period of time where demand, expectations are high. The mosaic of these puzzle pieces need to play out a little bit more to kind of keep that sentiment going, I think, in the space. And that's why tonight is so critical.
Do you feel like we yet know what the risks are for 2025? New administration, new White House. We've seen President Trump there before, but I do think it's going to be a little bit different. We're seeing what his administration looks like. We know the policies he's interested in, but there's what you say on the campaign trail and then what you get done with the Congress. So do you feel like we understand clearly the risks to investors in 2025 yet?
So I'll be just overly transparent. No.
Well said.
I don't believe so. And just to be add a little bit more to that, I mean, anytime you try to predict what Trump is going to do, just don't, because it always ends up being a different probability outcome. And I think the thing that investors are dealing with right now is this push and pull between an environment when earnings are expected to grow.
Right.
Tax policy probably will be extended that will benefit stocks and deregulation, that part of the discussion. That the Fed still wants to cut rates over time to normalize relative to where we're seeing inflation going in different parts of the economy. But then you have the other side of it. You don't know exactly how the votes are going to play out on certain policy decisions. You don't know definitively if some of these folks are going to be nominated and go through the Senate process with approval. So I think this mosaic and these puzzle pieces I keep talking about have to play out.
Right.
But the market will come back to fundamentals in a couple of months, Carol. That's really, I think, where it will go.
You mean like earnings and valuations and
consumer, those types of things.
Well, I have so many questions here. I'm wondering about
You've got 2.5 minutes, buddy.
Well, I'm going to go fast. How do you view the market as being a check on President-elect Trump and his policies? We know he follows the S&P 500 so closely.
I think anything that helps to support messaging is important to the administration. So if the markets are moving in a certain direction, if we're still getting positive economic growth on a quarter-over-quarter basis, if we're not causing a labor shortage due to implementation of an immigration policy change.
Which would be very tough if you're going to overnight pull 11 million people out of this country, more or less.
Right. So these things, and you look at some of the people that have been put in some of these positions, they're better than maybe people that Trump had in Trump 1.0 in being communicators. So I think to your question, Tim, it definitely matters where some of these economic things go.
What would you say the tone is, or what you're hearing around here as you walk around and talk to people? Is there a common thread in terms of what people are talking about?
I think recognizing these uncertainties, the thread is a heightened awareness of risk management. Making sure that you're not...
More so than a year ago?
I believe so. Because I think we're in a totally different part of this unwinding of the unintended consequences of policy decisions that started back in 2020. And now we have another set of policy decisions that are coming out. But going back to your question, it's very hard to do a probability assessment around politics and what Congress is going to do.
Wait, you know what they're going to do.
Well, let's say Matt Gaetz gets confirmed as Attorney General. And is that a signal to you that senators will allow the Trump administration, will allow Trump to do whatever he wants? Can you extrapolate that from that?
I think it's fair to assume that there's a signal that there's more people in Congress that are more supportive of Trump now than his first administration. So that, yes, there could be pushing of the envelope in a certain direction. But I think going back to your earlier point, it's unlikely that policies will go to extremes because of the unintended consequences of how it's going to impact the economy. To me, that's the check. But it takes time for people to realize that as it plays out.
It's almost like you want to fast forward a year because you feel like things will settle in. We'll have a better feel of maybe what policies will actually make some changes. That's just kind of my gut feel.
Well, I'm going to say the classic advisor thing or investor thing here before we go. This is the reason why you stay broadly diversified and you don't have all your money in just a few companies, right?
Check. Got it. Brian, thank you. Thanks for stopping by.
Thank you, guys.
Brian Vendig, President and Chief Investment Officer at MJP Wealth Advisors.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.